right. Welcome, everyone. We are going live here. It is February 6th at 11 a.m. We'll get started with the show in a few minutes once we go live on all the platforms. Thank you for tuning in early, and we'll get started in just a minute. Welcome, everyone. We'll get started in just a minute. It is February 6th, just after 11 a.m., and we're just going live on all our platforms, and we'll get started with the show in a second. Thank you for tuning in early. All right, welcome, everyone. Thank you for tuning in. We'll get started in just a second. Looks like we're live on almost all the platforms. Usually takes about 2 minutes. All right, there we go. Looks like we're live on all platforms. So let me get started with the show. Thank you, everyone, for joining us today. My name is Nick Hiersche. I'm the president and founder of the Mortgage Calculator. Today, we are going to go through a demo of all of our daily rates live. It is February 6th at just after 11 a.m. East Coast time, and our rates are now live on all our programs. So in a little minute here, we'll get into all the live rates for the standard programs. We'll go over our conventional programs, our FHA programs, and then all of our amazing non-QM alternative documentation programs as well. And then I'm joined here today with our COO, Kyle Hiersche, who will explain a little bit more how to get with our team of over 300 loan officers in 17 different states. And our sales manager, Jose Gonzalez, is going to go into a detailed example here a little bit after we do the live rates. He'll go into a detailed example of today's topic, which will be, let me pull up my slide. Today, we're going to talk about commercial mortgage loans. So very interesting topic. Not a lot of mortgage companies offer these types of products, but we are a non-QM lender. So we focus on all kinds of different alternative programs, including commercial programs. So this would be for like a retail or an office, or for example, some of the crazy ones we get are like RV parks and other things like that. So a lot of different commercial property types that are very difficult to finance traditionally. And Jose will go into a couple examples of these different commercial property types that we could finance. And obviously, a lot of people want to know the different LTVs and amount of down payments we can use, and of course, the rates. Jose will pull up a live rate example as well. So that'll be our topic for today. But first, let's get into our daily section on the actual live rates today. So let me pull up my rate tool, and we'll get into it. So this is our pricing tool. This is for our mortgage professionals. So if you'd like to get a full quote with the full loan estimate and all the different costs, please get with our team members. We're licensed in 17 different states for primary and secondary homes, and we can do our business purpose DSCR loans, some of our favorite loans for investors in pretty much all states. And of course, the commercial loans that Jose is going to talk about at the end are also eligible in most states as well. So please get with our team for a full detailed quote. This is going to be a demo of the pricing today, a tool for our general rates and price for our general programs in order to show the indication for today. Remember, it's February 6th, just after 11, so all our programs are live, and we'll just check out the general market fluctuations that go on every day just to see what our pricing is on some basic scenarios. So for all of our demos today, we're going to do an 80 LTV loan, so 80% loan, 20% down payment. We're going to search for a desired price of one discount point. Most of our clients are asking to buy the rate down a tad bit. They can finance that through various ways, but that will be our scenario for today. We're always going to look for the best rate for one discount point in cost. We're going to go over conforming conventional first. We're going to FHA second. Usually that's the next best option for a primary home purchase. And then we'll go into our expanded guidelines, aka non-QM programs, which are amazing. And we have thousands of different programs from there. What we won't go over today is VA. We do appreciate our vets. If you do qualify for VA, please get with our team. We can quote that in just a couple minutes. And same with USDA. If your property you're looking at is in a rural area, please get with our team. We can put that out for you in just a couple minutes. But not everybody's looking in rural, so we won't do that live today. So our first demo today will be conforming conventional, purchase, 30-year fixed, pretty standard scenario, primary home, single family home, 1 unit, Florida, Miami-Dade. That's where our office is based. And for all of our scenarios today, we're going to use a 760 estimated FICO score to see the pricing and an estimated debt to income ratio of 40. So those will be our basic setups here. So let's check out what the pricing is today for our standard conventional. And this is a live tool, so I do have to get through a security check. And now the rates will pop up. As we do every morning, please know that these Home Ready and Home Possible programs are amazing, but they're only for borrowers under an area median income or in a census tract area. So we'll cruise down to the standard programs that anybody can qualify for and check out the rates for those. So the specialty programs, still there. And it looks like this program is a pretty standard program. It looks like we have a 6.49 rate for 1 discount point in cost. So the rates have gone up since last week a little bit. Here's another one conforming, same thing, about 6.5% rate for 0.875 in discount point cost. So that's probably the best combo that the computer found that I would recommend to a client. And as you notice, just the other day we were down around 6, and the rates have gone up a little bit since then. So we love to see these fluctuations, and that's why we love to do this show every morning so everybody can see exactly how that affects their rates and their quotes. So now if a client does not qualify for a conforming loan, typically that's our first option. Let's go back to the pricer and check out our FHA options. So we'll go with the same scenario. We'll go 80 LTV, 1 discount point, or check out our FHA, but everything else will stay the same. 30-year fixed, primary, 1 unit, Florida, 760 FICO, 40 DTI. And let's compare our FHA rates this morning. FHA rates moved a little bit up as well. So yesterday they were a tad bit lower, but here's a great option, 5.5% interest rate for 0.75 discount points, 0.75 in cost. So that's the best option the computer found this morning. And remember, with FHA, there are additional costs for monthly mortgage insurance and upfront mortgage insurance. So please check out the APR when you're comparing across programs. Now, if a customer doesn't quite meet the additional expanded guidelines that we have under FHA, a lot of lenders do not have an option, but that's where we come in at the Mortgage Calculator. We specialize in non-QM or alternative income documentation programs. So a lot of lenders maybe only have conforming in FHA. We have thousands of loan programs beyond that go beyond those guidelines and allow us to use expanded guidelines, aka non-QM. So notice when we select this, everything else will stay the same, but we have a new pop-up here, our income verification. So we can use full doc, which is what conventional, conforming, and FHA all use, or we can use all these other options with hundreds of programs under each. So we can use 1-year alt doc, 2-year alt doc, asset related, business bank statements, 12 and 24 months most common, investor DSCR, we'll go over that in a minute, personal bank statements, 12 and 24, definitely the most commonly requested program, and a few others as well. For our demo today, we'll always go with the personal bank statement, 12 months, our most popular program by far for someone purchasing a primary home. And this is going to be for a self-employed borrower. So a self-employed borrower who may not qualify using their full tax returns. Maybe there's some write-offs or other things that don't quite get the income we need. So we're going to use 12 months of business bank statements to then determine a debt to income ratio for that borrower and qualify them with these alternative programs. So this would allow a borrower who would not otherwise qualify or perhaps qualify for more income using this type of documentation and therefore qualify for a larger home purchase. So a lot of our clients look to these programs to solve their specific problem or get beyond their limits on the conforming or FHA. So let's check out what we have for our non-QM options. Obviously, non-QM are going to be higher rates. So you see here our rates right now. Best program was a 7.5% rate for 1 discount point in cost. And you'll see there are dozens and dozens of programs here, all with the bank statements options. And these all do vary with every program, right? Every program has different qualifications. Some of them may allow such things as like a bankruptcy in the last year. Some of them may not. So please get with our team. They'll navigate all these options. But you see here, we have some as low as 7.5 rate for one discount point. And then some of these other programs go up in cost because they obviously allow some sort of other loophole or other guidelines that are beyond what some of the other ones may allow. So please get with our team. We'll navigate you through here. There's just a ton of options. Oh, here's a nice one for 6.875, actually. That's a pretty good option. Should have popped up at the top of the list there. But that's why we love to go through these examples, dig through all these programs. That's what our team will do for you. Find the exact combination that works best for your scenario. Now, before we get into Jose's cool example, we always want to do live rates for our investment properties. So let's compare our investment purchases. So someone that's buying their first investment property, or maybe their 10th or 100th, we still have all these options for them. And a lot of our customers are also requesting investment properties for short-term rent. So I do want to highlight some of the options that we do have for properties that can use short-term rent. So for examples, let's do 80 LTV again, same as we've always done, 80% loan, 20% down payment. We're going to do conforming first, and then we'll compare our expanded guidelines options for our investment purchase. So first we'll do conforming, 30-year fixed, everything else is going to stay the same, 760 FICO, 40 DTI for a conventional loan. And let's check out what our conventional investment rates are today. So as we do every morning, remember there are some extreme, I would call them penalties, but they're called loan level price adjustments. But basically, the government entities that sponsor these programs have added a penalty to investment properties. So while we do see some great rates, there are a lot of costs associated with that. So unfortunately, we can't find any rates with a one discount point in cost. So the computer found here 6.625 rate was the lowest we could get, but the discount points are 4.375. Probably not even a legal quote once we do all of the numbers, right? So it becomes very cost prohibitive for investors to purchase investment properties with conforming programs right now, just because the GSEs, the government-sponsored entities, are trying to add penalties to basically force people to not use these programs, or think about it a little bit, right? Here you see the least discount points, 6.875 rate. We have 3.75 discount points. So a lot of our investors are asking, what other options do we have here? They do not mind going up in rate in order to lower the discount points. Often our investors, if their property cash flows, they would rather save cash money. So that's where, especially now in this high rate environment, we do get a lot of requests, even for customers that do qualify for a conforming purchase for an investment property, actually request our non-QM programs because they would like to not have to push out 4.375 in additional costs to purchase that property, right? They want to save cash in hand. So that's where our non-QM options come in. Be a little bit higher rate, but we'll have a ton of options for lower discount points, which our investors love, as long as the property cash flows typically. So we'll pull up our expanded guidelines options, set this to investment property again, everything else staying the same, but now under expanded non-QM and investment, we have a couple different options that pop up. First, we have our income verification for our non-QM programs. We can use all kinds of income. Our most popular for investment properties is our DSCR because it requires no income. That's simply going to use the property estimated rent income in order to cover the property's PITIA or mortgage costs, right? So as long as we're able to cover that debt service coverage ratio, as long as that ratio is typically above 1, we can typically do that loan. So there are a ton of different options within here. You'll see once they pop up. But please get with our team. We'll navigate you through those. But these are our most popular programs by far. And when we have an investment property, non-owner occupied, and it's under non-QM expanded guidelines, we always have a prepayment penalty. So we always price it with 3-year. That's typically standard for a non-QM, non-owner occupied investment property. But you have options for 0 prepay and options for 5-year. 0 will cost more, 5-year will cost less. So we're going to stick with 3-year as our most common option. And that'll give us our best pricing scenario. So let's check out our DSCR rates right now for an 80% LTV, 20% down purchase. You'll notice the rates will be higher on these programs, but the discount points are much less. So here, the best option the computer found was an 8.375 rate, a little higher than it was last week. For all our investors that locked in their deals last week, good for you. And we have our discount points of 0.850. And that is obviously going to save our investors money in their pocket, right? So instead of 4.375, Now they can save nearly 4% extra funds of deal to go put into the next deal, right? So our investors, as long as this thing cash flows, which that's what this DSCR value shows, as long as the property cash flows, investors are typically happy to have a higher rate in order to reduce their out-of-pocket costs. So hundreds of different options here with the DSCR program. Please get with our team to navigate which one of these works exactly for you. We have rates as low as 8.375 with the 0.85 discount points, and they obviously go up and down, depends on the type of program. As I mentioned before, if you want to use short-term rental income, very common request that we have, might be a little bit higher of the rate because only certain programs allow us to use that short-term rent. So please get with our team. They'll go through all these different options for you and find the best that fits your scenario. So now we've gone through all the rates today. Again, that was the rates just today for February 6th. Hopefully the rates come down a little bit like they did last week. We're all looking for that. But this is what we have today. And next, we will go into our specific examples. So let me go ahead and switch up my screens. And I'll introduce our topic for today. All right. So today we're going to go over commercial mortgage loans, as I spoke about before when we first started. Jose is going to go into a detailed example. We have a ton of programs. These are a little bit more difficult. I think Jose has a couple simple examples, but obviously these take a little bit of doing. We have to go request from different outlets and actually propose each scenario. There's no instant pricer for commercial mortgage loans, really, right? So that's why we love to do the show for all of our standard programs. We can get instant price every morning at about 11 a.m. once all those programs are updated. However, for these commercial products, for retail, office, anything that's not residential, it is a little more difficult. So Jose's prepared a couple quotes and can talk a little bit more about all our options for financing properties that you may not be used to hearing about options for finance. But that's really where we love to come in at the Mortgage Calculator, provide alternative options for every different scenario out there. So let me go ahead and highlight you, Jose, and you can go ahead and take over.
Good morning, everybody. Thank you for joining us this morning for Daily Mortgage Rates Live with the Mortgage Calculator. Today, we have example here on a warehouse purchase, right? So I have broken this up into two different scenarios. One is an investment warehouse purchase, and the other would be an owner-occupied warehouse purchase. Obviously, still an investment, but in the first scenario, you're buying the warehouse to rent it out. And in the second scenario, you're buying the warehouse to be occupied by your business, or at least 51% of it occupied by your business, which would be a small business administration loan. So in the first example here, we're going 30% down, 70% financing, 70% loan to value on a true commercial purchase, which these are typically based on the prime rate. Sometimes they're variable, sometimes they're fixed. In this type of a scenario here, it's fixed rate, 10.74% with a cost of 2 points. So for our scenario here, we have a $950,000 purchase price. So again, this is investment where you are purchasing it to rent it out only. This is not going to be occupied by your business. If it's owner occupied, that changes how they underwrite the file and how they assess the risk, because they usually view in the commercial world an owner occupied property as a little riskier than a property that's going to be rented out. So what are our options if you're going to occupy the property? Now, this is a mind blower here, because here we're looking at 30% down payment, right? Investment. Now, if you're going to occupy the property, we have a couple of options. This first one is probably blowing your mind right now, because we can actually go 100% LTV, owner occupied warehouse purchase, with an SBA loan. Now, there are a couple of caveats to that. The first is you have to have been in business at least 2 years. And the second one is that your business has to currently be occupying a warehouse, not the warehouse you're buying, but has to be occupying a warehouse for your current business operations. So if you can show that you've been occupying that a warehouse for at least 2 years, and you've been in business for at least 2 years, and your business cash flows adequately for the program, because this is a full doc program where they're going to be looking at the cash flow of the individual as well as the cash flow of the business. So if you do meet the 2 years in business and occupying a warehouse for 2 years for your business, and you can meet the cash flow requirements, you're looking at 100% financing. Now, this is at a 10.5% rate. The SBA loans currently are at prime rate plus 2.75%. So it is, again, going to be a variable rate. Short-term rates have been going up lately, so you all know how that lies, and I'm sure that's going to be going back down in the near future, but right now we're at 10.5%. Now, if the borrower does not meet the requirements of having been in business for at least 2 years and or is currently not renting their warehouse space, who knows, maybe they're running it out of a garage and the business just grew, whatever it is, if they're not meeting those requirements, then we can still do it, but then it would not be 100% financing, it would be 90% financing. Still not too shabby. We go from 70% financing on an investment uh, warehouse where you're going to rent it out to 90% and maybe even 100% financing on an owner occupied warehouse. Very good deal for those of you out there working with your business owners who or future business owners. SBA, very good option, and actually the best option for owner occupied properties. There are certain scenarios where you would go to a non SBA loan for an owner occupied property. If you need a few more options, maybe if you need an alternative document option, then it would be something similar in loan to value as the first option that I showed you, 70% LTV, similar rates, except you're going to have to provide cash flow and bank statements, stuff like that, but you're not going to have to provide any type of tax returns. So again, three very good options here. Two of them totally on one end of the continuum, another one being the investment, and the other two owner occupied properties. And I bet a lot of you didn't know that you could actually do 100% purchase of a warehouse. So we can definitely service all of your loan types at the mortgage calculator, whether it be the DSCRs, which we love to do, the commercial, first time home buyer, whatever you need, we have solutions here for you.
All right. Thank you, sir. Now let me pass it over to Kyle, who can wrap it up and just explain how to get with our team and get yourself a commercial mortgage quote, just like you just saw.
Yeah, absolutely. Thank you, Jose. That was great. So as Jose said, every kind of loan we can walk you through, right? So at the mortgage calculator, our loan officers are trained to be consultants. There's a lot of ins and outs of these different programs, especially these non-QM programs and commercial programs. So get with one of our loan officers. We have over 300 loan officers from all across the country. We're licensed in 17 states, and then we can do commercial loans in most states, as well as the DSCR, business purpose loans that we were talking about earlier as well. So to get with one of our loan officers, if you're already working with one, maybe they shared this video with you, that's great. Get with them. They can quote your specific scenarios. If you're not working with one of our loan officers already, you can go to themortgagecalculator.com, which is actually right here below me, and you can apply right there online, and we will connect you with one of our loan officers. If you want to send us an email, you can do so at info@themortgagecalculator.com, and we can connect you with one of our loan officers. So we do this show every weekday. at 11 a.m. Eastern time. We pull up the live rates for that day. We go through them, and then we do a deep dive into a subject, just like we did today with the commercial mortgages. So tune in every weekday, 11 a.m. Eastern. So we hope to see you tomorrow. Thank you, Nick. Thank you, Jose. We'll see everyone tomorrow. Take care. Thank you for tuning in.